you can already come up on stage. So welcome everyone to today's panel. My name is Pascal Hügli. I am the crypto investment manager at Murky Baumann. Artship is called nowadays. And I also do have a podcast myself where I do these type of interviews. It's called Less Noise, More Signal, where we talk about tokenization, crypto, as well as macro and finance. And yeah, I'm happy to be here moderating the panel today. I think before we get started, I would say you introduced yourself. We go, maybe ladies first, start with you, Fatih.
Thanks a lot. Good afternoon, ladies and gentlemen. So my name is Fatih Bekiri. I'm heading the tokenization department at Sygnum. I have a background in corporate finance consulting, traditional banking, and now almost 4 years in this role, and I look very much forward to an exciting panel.
I go next. I'm Paolo Brignardello from the Luxembourg environment. I'm from FundsDLT. FundsDLT is a company that has been created almost 8 years ago in 2016. Now today belonging to the Deutsche Börse Group, and more precisely from Clear Street. My background is mainly in transfer agency and fund distribution.
Nice.
Yeah, hello everybody. My name is Markus Fehn. I work for a company based in Düsseldorf, Germany called Chartered Investment. We are active in 3 business streams. One is securitization via SPVs in Luxembourg. 2 is indexing, which is not so relevant for this panel. But 3rd is tokenization, because we have a subsidiary company which have the license to do this business in Germany under the Electronic Securities Act. And that is it for the moment, I would say.
Yes, no, that's great. Well, I think you guys can certainly sort of weave in where we are placed within tokenization during the panel. So I want to move to that first question. I guess when we talk about tokenization, it's still sort of important that we define the term. What do we mean by tokenization? Maybe Fatih, if you want to start.
So for me, tokenization is, let's say, simply speaking, bringing a smart contract on chain. So a self-executing code on chain. Holistically speaking, I would say tokenization is how we create products on chain and how we access them and distribute them. So I believe the tokenization is much more than just bringing a smart contract or value or ownership rights on chain.
Okay. You guys have anything to add?
Yeah, I have something to add. Tokenization, you should understand that it's not an object in itself, right? It's an information that you record, okay? And the information that you record into a ledger is information that brings multiple elements. For instance, transactional element, ownership elements, and also additional information. So you combine this information together and you historize this information, so it becomes very powerful in order to have, I would say, a register of information that can stay for longer. That's very important.
Yeah, let me come from the securitization side, because we are also active in securitization. So in effect, tokenization is digital securitization. Yeah, so it's representing assets in digital form. And what is securitization? It's the packaging of assets. So I think it's very simple to represent assets in a digital form, and this form is then called a so-called token.
Okay, so that's exactly what I wanted to ask next, because that's what I usually hear, tokenization. Basically, it's just securitization 2.0. Is that accurate, or is it maybe going beyond this?
Yeah.
I would say it's a combo. So clearly, as I said, there is a part of it where it's just simply securitization, new in a way to wrap ownership rights. But as I said, I think it's the way we build products, how we access it, how we transfer it, and so on and so forth. So we have big hopes in tokenization, and it's not just the securitization, I would say. Do you agree, or?
Yeah, I would say to this point, lots of things may seem digital from the front end side, but on middle office, back office, custody processes, not everything is perfectly automated and everything works perfectly already. And I think the tokenization compared to, let's say, a pure digital upgrade with using blockchain technology, it provides the opportunity to really put processes to another level, to a very efficient level, and that is particularly looking into middle back office and custody processes when we speak about existing financial instruments.
Mm-hmm. Yeah, I agree with you what you say. Just on my side, I would say that what it represents is a transformation of the market infrastructure, so that on the market that allows to have processes, as you said, that are much more lean and self-executing as well with smart contracts. So you are not just transforming a product like that, but it's also you're changing. You have option for transform the whole process. What you're saying here.
Yeah, and I think you could also split this conceptually in two boxes. One is tokenization with regards to financial instruments which already exist today. So you make a stock, a bond, a securitized product, you create a tokenized form of that. That's, let's say, one box, and there you have all the optimization. The other box is the so-called, where you speak about real-world assets, right? So that is actually not necessarily only a topic about optimization, but about accessibility. So we make assets which were not accessible so far, accessible, and that is, why is that possible? One reason is that the technology and the usage of blockchain technology allows to make these assets accessible.
Yeah, I mean, that's actually a great distinction, that you just made, between these two buckets. So you have like the traditional assets that are being put on chain, but then also like some other type of assets that some sort of way haven't been financialized proficiently, and that could be changing. I certainly want to come to the second basket and talk about this, because I think there's still some where the hype part is maybe also at, and not that much has followed through. But the other thing, when you talk about the first thing that you mentioned, making the regular infrastructure, financial infrastructure more efficient, I mean, it was also Larry Fink, who said it's going to be the next generation of securities. And I guess this is probably what he's alluding to when he says, this is going to be the next generation. He really speaks of these back office type infrastructure things where you can make things more or leaner and just more efficient. Is that right?
Yeah.
Yeah.
For sure, that's what we are already seeing in the market. We see a lot of initiative in the market on the space, of course, for financial instrument, but not only for financial instrument. And from technology perspective, this is already proven. So we see that already, that its efficiency is there and it's possible. Of course, for the industry to embrace this new technology is a bit complex, because you have already processes and systems already in place that are probably are there since many years. But the technology itself already proved that it's feasible to have efficiency, it's feasible to have a process that are much more lean, as I said before.
Mm-hmm. Yes. Yeah, go ahead.
Yeah, I think Larry Fink also looks at this topic from the perspective of BlackRock. And one of the samples he mentioned in one of his interviews is proxy voting. Okay, so for BlackRock, proxy voting is a huge undertaking and a huge mess, so to say, because there's lots of effort. So the idea obviously is that if stocks, ETFs, whatsoever would be on chain, then it would be much easier for BlackRock to manage the proxy voting challenge and efforts, because it's just much more efficient and people could just give their vote via the wallet or via the blockchain, because you can build in a smart contract, is what Fatmire said, you can build their functionality to make this an efficient process, and you simply cannot do it with the existing technology. So therefore, I think this is or could be of great value. As said, it may take a bit of time.
Yes. Okay. Yeah, because that was what I was going to ask. You said it could be of great value. So my question would be, are we seeing these type of initiatives already? Because I think you also said we're seeing sort of some initiatives. So where are these initiatives at, if we really zoom in now?
Please.
Yeah.
I think when we look back where we started with tokenization, right, very simple, only in Switzerland and so on. But what we see now, we have big players such as BlackRock coming in. We see the volumes. We see that regulation is coming. Being in Switzerland, for example, Base Digital getting the license. We see also in the US that the regulation is moving forward. So I think we have a very good momentum where we see a lot of initiatives with institutional players, and I think that we have now a momentum to take off. but at a very low scale. So I think there is still huge potential to see more, kind of advantages as expected from Larry Fink and many others in the industry, right?
Yeah, so I think it depends on a bit where you look at. So if you look at a market and a market which is already very efficient and highly advanced and highly automated, I think stocks is a good example, right? I mean, why would somebody tokenize stocks now? Maybe to solve Larry Fink's issue with the proxy voting, that's one thing, yeah. But in general, obviously, stock trading is extremely efficient, and also the cost on stock trading is rather optimized, so to say. So I think this is not the immediate use case to look at. What's more interesting to look at is obviously when you have markets, maybe in countries which are not so developed in terms of automated processes, where then you could move to the tokenization right away. So you're basically skipping the step which and the technology which Europe or other developed markets have built, and go right away to tokenization. I think this is an interesting use case which you can look at on the one hand side. On the second side is we see, I think, a huge trend at the moment in the US and also in Europe for so-called active ETFs, so more and more active ETFs coming up. So there might be also a way to think of that. There's still lots of mutual funds out there, and these mutual funds are then sometimes converted to active ETFs, because active ETFs is it's the name of the game at the moment. You could also skip this step and go to a tokenized fund version right away, because you gain lots of the ETF advantages and even more. So I think this is two interesting cases to look at, while on the one hand side, you need to be careful of when you have a very efficient infrastructure, what game you want to play there, and because the cost game is obviously a difficult one when the technology is very advanced.
I can add more precisely that, for instance, the use cases that in the industry is looking at the moment, of course, many point to the investment funds and other types of private equity products, because are very demanded. And investment funds today is a process to invest into funds that are very complex, very lengthy. So it takes a lot of time to process, and it's not efficient enough. So that's why the industry is looking at that as an opportunity. More precisely, is money market fund today the most interesting case, because it's for the B2B business, where there is a scale, okay, and so there is an important component there. And the money market fund, of course, being able to trade on money market funds 24/7 with a settlement that is almost immediate, and that's interesting very much. And be possible to use that as a collateral for other business. That's an important use case that today the market is looking at.
Mm-hmm. Yeah, that's interesting. I mean, I can speak to one case that we had within the bank as well, where we were looking at potentially tokenizing a sort of module or product that we have ourselves. It's called a liquidity optimizer, where we would sort of invest into the underlying, which are like US Treasuries and other Treasuries and just bonds. And there we were sort of thinking, okay, we can maybe tokenize this. And we were looking at this, but then the result was kind of, okay, the problem is that we will have to create an SPV, where then that's sometimes good. These things are in there. And then like my fund manager, the bond manager, he was like, yeah, but then I don't see the efficiencies, because then I have the token on the one side, it has the SPV, and so it's like double, so to say, and there's no efficiency, or it's even more expensive. So how is this going to be solved? Because to me it feels like a chicken-egg problem, sort of.
Yeah. I think if you start with something new like we do in tokenization, there will always be this parallel world, right? Because it's not going to be just a simply new product. So we have the old world to move into the new world. So that's why we have to make the investment and have these two paths, and at some point it will be just one path, because they come then together. This is how I see it. So I don't think that it's going to be just day one and then suddenly the old world will disappear. So it takes time. So that's why we have to start and do maybe things in parallel. We see huge demand for on-chain products already, and we have just to continue, and at some point it will be much more efficient. This is how I see it.
Yeah, I would say that, again, tokenization itself, because we're talking about that, It's just a tool to do better things. So it's not the solution itself for the business side. There is a need for having businesses that move into this technology. And today, for instance, SPV and other solutions like that is to serve a specific markets. So that's the use case, that's the business case that really interests. And so the solution is not that it's costly, it's what you want to do with that, which market you want to go, which client segment you want access with these products. And then the technology helps you into achieving that. And that's where you don't have the pain of the additional burden, additional cost that the solution brings.
Yeah, let me add to that, because I think this is the case probably everybody has faced when looking into the tokenization space. I think this is obviously sometimes very frustrating, to be honest. Yeah, but I think this part of the game. It's what Fatmire said. It doesn't change the economic outcome, so to say. It's just part, I think, of the story. And obviously, the question would be, why did it not work? Yeah? One reason might be, for instance, for regulatory reasons, yeah, and I think one of the things which still needs to come and needs to progress is we need to have a harmonization of regulatory terms, ideally as much as possible on the world. Obviously, that's a huge challenge. But indeed, if you have different regulation, and then exactly these cases come up, because on the one hand side it's possible, on another not, and then you have this general issue which I think in Europe exists, because you have just a split on each capital market per country, and I think there's again nowadays discussions on EU level to harmonize and form a capital markets union. I think that would also help in that regard to have these cases which are really tangible and feasible, so to say.
Okay, I see. But then, plain and simply said, like, is it true that the true blockchain enthusiasts, they have been right all along? Like these securitization agents in Luxembourg, all these different companies that are there, they could be disintermediated at some point, you know, then we wouldn't need them anymore, because all they do is probably set up these structures, you know, that we could use the underlying technology for. Is that correct, or is it maybe too short-sighted?
I don't know,
Yeah.
So it will depend on which intermediary, obviously, we speak about, so to say. Yeah, and again, the question is about the use case. But the general answer that there will be less intermediaries. Let's say if the technology advances at the same speed, and then there will be some regulatory harmonization and a bit of more adaptability in the next, let's say, 3 to 5 years or next 10 years, then it's for sure that there will be less intermediaries than today. So I think this is a given.
Yes.
I think we are at an early stage to say that. It's difficult to predict that. Of course, it will be possible to have multiple actors issuing products, and when they probably converging, it's still a bit early for me.
I also hear a lot of people talk about capital markets, you know, like just in general, like capital markets where tokenization can also move in and make things more efficient. But in what way would it be more efficient? Do you have any insights there? You know, like is it sort of settlement risks that also can be mitigated, or just like settlement times that can be made a lot faster? Or what is it when people say that tokenization is really what makes capital markets more efficient in the end?
I don't know, want to start?
Yeah.
Okay. Of course, probably capital markets remain an interesting area where this technology can help, for sure. We see different approaches. It depends again from the type of product that will be available from the capital markets. There is a shift. We see that today, for instance, that product like private equity products is going into be much more accessible in the market, and so can drain part of the investments into another type of investment process into companies. And of course, the technology, the blockchain technology can for sure help there. There are recently have been announced by Hamilton Lane, for instance, a very interesting use case they developed in the US, whereby they create tokens that can be accessible for $500 per tokens to start. And this, you see, it's an opportunity to try to transform that market as well.
Yes, I see. One question, another maybe maybe a critical point that I hear, you know, like people saying BlackRock is also out in the market, you know, and we mentioned Larry Fink, you know, he's a real tokenization bull, so to say, and they have their product out there built where they sort of tokenize the money market fund, as far as I'm informed. But then what I'm hearing is also that these products sort of have to be whitelisted, like for people, it's just for definite amount of clients who can move in there. And then you hear the critics say, well, why is he using Ethereum and open blockchain or stuff like this? It makes all these benefits sort of obsolete, you know, and isn't that maybe also a problem between regulation and this new open technology that we have here? Do you see there sort of a dichotomy, or is that not really the case?
Yeah, I think that this is a challenge that we have with regulation, but not a problem per se. Because just because we use blockchain, it doesn't mean that we don't have, I know, investor protection in place and all these kind of things. There's a reason why we have market conduct and these kind of things. So we just have to find a way how we can implement it and be much more efficient, but this will not disappear. This is how I see it. So we'll use blockchain, but in a regulated and compliant way, but much more efficient. This is what I hope and I see.
Yeah.
Any thoughts?
Yeah, and let me add a bit, sorry, I'm jumping a bit to the former question regarding advantages in capital markets, because you mentioned, I think, settlement risk, and we didn't touch on that. So, of course, at the moment, the standard settlement time is still T+2. We're now moving to T+1. I think in the US it's already done. In Europe it will come. And then there's initiatives to, of course, go for T+0. But, of course, on tokenization and on blockchain services, we speak about minutes, so to say, in terms of settlement. And, of course, this is one of the advantages. Another advantage might be in terms of cost, depends on the case. And then thirdly, I just want to mention it, there's lots of efforts in terms of life cycle management, okay? So all these corporate actions happening, money transfers here and there, subscriptions and redemption process. I mean, these processes are still, let's say, partially on systems coming from, let's say, the former centuries, so to say. Yeah? And moving there to a tokenized world on a blockchain will enable these processes to be very efficient, reduce intermediaries, and make the system as a whole extremely efficient. The question will be, and coming back to the regulatory point, how that will play out, but I fully agree. I think regulation is not a blocker, but the question is how to deal with that, and obviously we need to stick to the regulation because it makes sense to protect the investors and to do checks on assets and so on, because the technology shall enable things and shall do something good and not create certain gaps, so to say.
Anything to add from your side?
Well, not really, because of course I fully agree with the fact that regulation is not per se a problem. It's true that probably today the regulation is not yet perfect. Let's say there are still missing some pieces in order to be able to really allow financial product to reach the mass market, that need to have a more easy access to the product, but also be able to exchange product, token products, I would say tokenized products between peers, I would say. That's a bit still complex. The day that will be possible, then you will see much more adoption, and probably this new technology will pick up seriously in the market.
Yes, I see.
Let me.
Go.
Shall I add one more thing in terms of regulation? There again, my point is harmonization, because let's say on the EU level, we have MiCA now coming into place. In Germany, we have the so-called Electronic Securities Act, and under the Electronic Securities Act, the entity who registers a node from an issuer in the blockchain is the one who is regulated. Yeah, I think in Switzerland it's the issuer who was regulated. Correct me if I'm wrong.
In Luxembourg the same.
Luxembourg the same. Yeah. So I think it's still appreciated by us that the German government is pushing ahead and creating a law so that there's a level playing field. But of course this needs to be standardized, because otherwise it's going to get difficult. Yeah.
Yes, I see. Okay, great. Well, I mean, as I already said, I'm coming from more the crypto sector, you know, where all the people are excited about cryptocurrencies and public blockchains. And so you can also hear these people really cheering on like the tokenization topic, you know, like, okay, it's going to happen on public blockchains and stuff. But then just last week, I think I read that the CME group, they're now experimenting with this asset tokenization platform, which is, I think, Google Cloud Universal Ledger. And this is a private network, And so my question would also be now asking for these crypto guys who are so excited about tokenization, maybe is there the possibility that the reality in 5 years will be the whole world will be tokenized, but it's just going to be happened on private networks and not on these public rails that we see? Any thoughts on this?
Well, of course, for instance, we use mainly a private blockchain at the moment. Of course, we look into public blockchain as well. True that a private blockchain is not an easy solution, I would say, because of course you have to federate many clients around the private blockchain. Okay? While in the public blockchain, then you have the possibility to very quickly onboard get access from multiple actors, and you need to of course to KYC these actors for financial instruments for sure. Nevertheless, they can access an infrastructure that is much easier to adopt. In the private ones, you need to onboard everyone, and probably you can have a much more control over that, but it's really needed. That's the question.
So I think that there will be a kind of a hybrid model where both will exist. I think private chains make sense for a consortium of different companies where they have a different governance, different privacy requirements. But I think still some use cases will remain on the public blockchain, and there will be bridges between these two worlds. But as I said, I believe that the public blockchain have, let's say, the better infrastructure.
Yeah, I think it's hard to foresee. In general, I agree. I think there will be a mix. There's at the moment, I think, use cases for both, and I think the more established or very large companies established, they make use of the technology and then do it in a private, protected environment. I think it makes a lot of sense for them. I think the Clearstream Banking Frankfurt was in the press this week because their D7 system, I think, passed the mark of 1 million transactions. There was a huge show in Frankfurt about that, and I think obviously they can quickly scale that. They have lots of power, but it doesn't mean that public blockchains have no right to exist, in my view, because permissionless public blockchains also come with the advantage that they are available everywhere, and this enables lots of cross-border activity. And I think enabling cross-border activity is also one of the huge benefits of the technology, to make things accessible, because tokens are then, let's say, globally accessible, obviously under certain regulation.
Yeah, and I will add that I hope one day we will no longer discuss about if public or private. It remains permissioned, means that to access the blockchain, whatever it is, you need to be controlled, and the technology in itself will be less exposed to the investors. That's the most important element. In the end, it remains a digital service, and that's what the market wants in the end.
Yes, great. Well, I mean, before we come to a close here, I want to move to this other bucket that you were also referring to. We now talked about like traditional equities, bonds, funds that get tokenized, but there's this other bucket, usually referred to as RWAs also, and these more exotic assets that might not be bankable as of now, might not be liquid as of now. What do you have in mind when we talk about this type of sector, so to say? What type of assets?
I can start first because it's very easy. We just focus on investment funds, so nothing else.
You have anything, Mark, or you, Fatih? I mean, Sygnum has tokenized a Picasso, right? Back in the day, and that's probably one of these things.
Yeah, this is, I think, one of the most famous cases that we did back then. So what I expect in the market is a volumetric. So we started to tokenize cash, money market product, and I believe that we will move on this risk frontier. So I believe that we will soon see, private debt, much more private debt being tokenized than equities and so on and so forth. And because the tokenization makes a lot of sense, but I think addressable market is very small, so we have to start with the big things, and this is what I believe to see, that we will move, or the investors will move alongside the risk curve, and we will tokenize more risky products. Yeah.
Yeah, so basically I would say everything which is non-liquid today is first of all in this box. And then the question is obviously where's the investor demand? Yeah? But it's a different situation compared to before blockchain technology, because certain things were simply not possible. So now I think the box is wider open, and the question is where's a bit the demand from the investors? I think private debt is an excellent sample to mention here. So in terms of loans, making, for instance, boxes of loans much better, much easier accessible, so to say, and that is what the technology allows for. And then you can go along the way. What is the investor preferences and how, let's say, exotic you want to get, so to say. Yeah, but I think this is not a discussion of the technology, but then about a panel of what investors prefer. So, and therefore, I think this is the interesting part here to make it accessible. Personally, I think intellectual property rights, so which are of tremendous value nowadays, maybe compared to 20, 30 years ago, is something which sits on balance sheets somewhere, rights for names or something else is something which is completely non-investable at the moment, and would be possible to look at if investors have the same idea as me.
Yeah. No, but that was a great point about the investor demand, that needs to be there, because that's something, I believe, that people in tokenization have held for a long time. We tokenize something and it's going to be immediately liquid, and obviously this hasn't really turned out to be the case, because it's the technology that makes it better transferable, but it doesn't mean that there's liquidity. So one thing that I heard critics say all the time as well is we need these security or secondary markets, for these stuff to trade on. Are we moving forward there as well? Because it feels like, it still hasn't been solved,
Yeah, so I start first. There is a huge demand. Okay, I think it comes from the fact that the enthusiast comes from the crypto. Crypto is very easy to access, I would say, type of secondary market. So they expect that for financial product there will be similar easy access to the type of venues or type of solutions. The industry is not yet there. The regulation is not yet there to launch the type of models. We start seeing, for instance, at a European level that there are few that's getting licensed in order to enable a type of secondary market, and so there is move into that direction, but it's at too early stage yet still.
Yeah, and I think it's also that the infrastructure needs a bit of time. So I'm with the fact that obviously it's nothing which goes in a second, but the infrastructure to build needs a bit of time, and I think we have a first company under the DLT pilot regime now who's approved as an exchange for tokenized assets. I think Big Swiss in Switzerland also got the approval to do something similar. So I think, and this was, I think, only a few weeks ago. So I think we need these approvals and to do it regulatory compliant and do it correct. And now I think if you ask the question in 2 or 3 years ago, and we are at the same point in time, then I think it will be much more difficult to argue against, so to say.
Let's hope, because I was told this 3 years ago already, but let's hope the future will be different this time. So maybe we have time for a few questions from the audience. You want to add something as well?
No,
sorry.
All good.
Because I see we're running up on time here, but do we have a mic? Or is there any question?
No question.
Because if there's not, I would have one more question, because we're here at the financial conference, so to say, there's probably many investors, who are looking at the entire space. So my question would be, if we now assume that this tokenization thing is really going to take off, as a retail investor, how would I profit off of this? Where can I get exposure? What are the best things?
So first of all, I don't give any investment advice.
Sure.
And no jokes aside, I think investors, they can access traditional products on chain, which is cheaper, faster, but also investing in crypto, because this is the underlying infrastructure, right? So the more projects we have on these layer 2s, for example, the more the value will increase. of this infrastructure. So that's why I think we have two ways how you can benefit as an investor.
On my side, I can say that we need to specify which type of investor, so segmenting the market. So you have institutional investors and retail investors. Retail investors probably reply very much on what you say, less sensitive probably to cost. A small portion probably is sensitive to cost, but not the majority, while institutional investors are very much sensitive on the cost. And this technology can bring very cost efficiency, so really reducing a lot some costs, so like transaction costs, custody cost, and these type of pockets. And probably this will be a very important driver. We see already that, for instance, for the money market funds, that you use it as a collateral. The process is very efficient and much cheaper than today.
Just two sentences to add. So I think it's a bit similar to AI. That's how I would structure it. There's companies who are active in the infrastructure space, and then there's the application of the technology. I think you can split it like this, and I think there will be value in the companies who create the infrastructure, but I would foresee that the even higher value will be created at the companies who apply the technology. And I think that's the same in AI, and I think it will be the same on tokenization. So applying the technology and creating value will create much more overall value than creating the infrastructure.
Yes, great. Well, I mean, is there a final question from the audience that needs to be asked? If not, I think we landed pretty much on spot. Thank you very much for all the great insights, and enjoy the rest of your day. Thank you.
Thank you.